Okay, so if you haven't noticed so far, most of the questions on quiz access for chapter 3 are a repetition of a variety of different scenarios, very much the same as the others, but gets you in the practice of doing these journal entries, because a significant part of accounting is journaling transactions or understanding how transactions flow through a software program, how they increase or decrease balances. And so this one, number 6, is going to go through the same things that we've done in like 3, 4, and 5, but we'll just keep on doing it so that if you run into problems, then you have a way to see the solution, or at least have me talk you through the solution. All right, so on these ones, we're preparing adjusting entries again. Okay, just adjusting entries. So on this one, we won't worry about the dates because they're all as of the end of whatever period. But we will worry about the accounts, debits or credits, and I'll work through this. So depreciation on the company's wind turbine equipment for the year is $5,500. So depreciation expense is going to be your first part for $5,500, and then you're going to run that to accumulated depreciation, and we're just going to call it equipment for $5,500. Okay. B is going to be prepaid insurance account for the solar panels had a $2,500 debit balance at December 31st before adjusting for the cost of any expired coverage. Analysis of prepaid insurance shows that $850 of unexpired insurance coverage remains. So we want to make sure we're hitting $850. So let's first put the accounts here. So it's going to be insurance expense, and it's going to be prepaid. Okay, so now beginning balance, right, is 2,500, and we know ending needs to be 850, so the expense is going to be the difference. All right, so 16,500. All right, that's how we do that one. C, company received 4,500 cash in advance for sustainability consulting work. As of December 31st, 1/3 of the sustainability consulting work had been performed. Okay, so this one we can do right in line. So let's do services revenue, but it's not services revenue first. It's actually unearned revenue and then services revenue. So we're going to do that. Unearned, the credit is going to be 1/3 of 450. So we're going to do equals 4,500 times 1 divided by 3. Okay. So $1,500. B is, as of December 31st, $1,700 in wages expenses for the organic produce workers has been incurred but not yet paid. So wages expense, and wages payable. Wages expenses 1,700, and we should have 1,700 here. All right. D, or I did D. E is, as of December 31st, the company has earned but not yet recorded $450 of interest revenue from investments. The interest revenue is expected. Okay, so interest revenue is actually a credit. So we want to start off with a debit, which is going to be interest receivable. And that's going to be 450. And then we're going to have interest revenue for 450. Okay. So let's go down here and drop those in here. Depreciation for equipment is 5,500. Our accumulated depreciation is 5,500. 2. insurance expense is $1,650, and prepaid insurance is going to be $1,650. 3, or C, unearned revenue is $1,500, and services revenue is $1,500. 4, which is D, is wages expense, $1,700, and wages payable is $1,700. And lastly, interest receivable is $450, and interest revenue is $450. Check my work. How'd I do? All good. All right, that is number 6.